Federal debt is exploding, up $100 billion in just 4 days. Will we be melting the family silver to cover Washington's drunkest sailors, or, as FX Hedge puts it, will we replace our wallets with wheelbarrows? In fact, it took just 100 days for federal debt to go up a full $1 trillion. Now, for those following along at home, that comes to $3.6 trillion per year in additional debt. That's roughly $28,000 per American family, or $2,300 per month, basically a second mortgage, and a generous one at that. Of course, that doesn't begin to cover what you give to Washington. Federal spending is about twice that, meaning the average American family sends almost $5,000 per month to Washington, which is largely hidden since they take it out of your paycheck before you see it, or they embed it in the things you buy. Now, a prominent Wharton professor is warning that the debt explosion could cause a, quote, meltdown in financial markets as early as next year. Joao Gomez, Wharton's senior vice dean of research, warns the $34 trillion debt, soon to be $35, could trigger a spiral like we saw in Britain in 2022, when national debt fears spiked interest rates, sparking panic selling in bonds that threaten to crash the economy and bankrupt banks and even pensions. The crisis, quote, terrified markets, crashed the pound to near parity with the dollar, and toppled the prime minister. Others have raised similar alarms. The CEOs of Bank of America and JP Morgan, the two biggest in the country, recently warned of a, quote, market rebellion over debt as we careen towards a $5 trillion, quote, fiscal cliff at the end of next year. Keep in mind, that's all counting current projections. In other words, it assumes no new trillion-dollar spending surprises, and it also assumes no recession, so the fabled soft landing. If, instead, a recession does hit, then going by history, the deficit grows potentially by another couple trillion as social spending spikes and tax collections slump. Even without recession and those new spending surprises, we're looking at $37 trillion in debt by the end of this year, and $40 trillion by the end of next year. It's worth noting that's about twice the pace that the Congressional Budget Office forecast. Yes, that was the forecast that said we'll have $144 trillion in federal debt by 2053. Now, when it came out that $144 trillion was met with an audible gasp, after all, that is more than literally all the money in the world. It's about 1/3 of the accumulated assets of humanity. And at the moment, we're actually going a lot faster. So what's next? Brought to you by Unchained.com. As the saying goes, if something cannot go on forever, it will stop. Washington has lost all semblance of fiscal sanity. At this point, they're competing who can drain the treasury fastest. Now, historically, when countries reach this stage, they begin to stumble from financial crisis to crisis, each one bailed out by freshly printed trillions, meaning each crisis converts into inflation. As these pile up one after the other, people start to see the currency as something risky, something you might keep in your wallet to buy lunch with, but not somewhere to park your life savings. Instead, they sell their melting dollars for things you can drop on your foot: houses, gold or collectibles, maybe Bitcoin today, even stocks, which have a lot more intrinsic value than the Fed's bailout script. Each seller drains the dollar yet further until it becomes a runaway process. Ludwig von Mises called this the flight into real goods, and once it starts, it is very hard to stop, certainly considering this gang of clowns in Washington. So yes, unless we change course, your next wallet could be a wheelbarrow. Okay, we'll be watching. See you next time.